This week, oil moved higher, markets dropped first, then reversed. Donald Trump said the US would respond strongly, and that triggered selling midweek. But that selling didn't last. Into the end of the week, buying returned and markets recovered. So here's the real question: why didn't markets break despite all this news flow? Because this week, markets moved on expectations, not fear. The main story of the week was geopolitical risk and how markets reacted to it. Midweek, comments from Donald Trump triggered selling in markets while oil prices moved higher. That move was a classic risk reaction. But the picture changed as the week progressed. Despite rising earlier, oil failed to sustain its gains and pulled back toward the end of the week. Similarly, equities recovered after the initial sell-off and finished the week at stronger levels. This gives us an important signal. The market priced the bad news, but did not extend that pricing. So risk perception increased, but panic did not follow. In sectors, technology stocks remained volatile during the week, but showed signs of recovery into the close. Energy stocks stayed volatile in line with oil movements, while defense stocks remained strong due to geopolitical risk. Gold saw safe haven demand and remained strong throughout the week. This suggests that investors are not fully risk-off, but are positioning defensively. Crypto showed a different picture. Bitcoin traded in a narrow range during the week without establishing a clear direction, while Ethereum showed similarly limited movement. Total market cap stayed flat, volume remained limited, and altcoins continued to show weakness. This indicates that liquidity remains constrained and investors are cautious. From a psychological perspective, investors avoided panic selling and bought dips during the week. Such behavior often signals that downside pressure is weakening. However, this does not yet indicate a strong and sustainable uptrend. Overall, markets are trying to balance between geopolitical developments, oil prices, and risk perception. Unless this balance breaks, it is difficult to see a clear direction. We talk markets, not noise. D&D.